Happy Friday, everyone. Thanks for joining us today on this edition of Business Daily. I'm Lee in Seoul. Let's get started with a look at the day's highlights. Amid rising trade protectionism worldwide, the number of non-tariff measures against Korea has gone up over the past few years. The Bank of England stands pat on rates as it expresses concerns entering the new year, while eyes are on what impact the U.S. Fed will have on markets. We have these stories and more coming right up. And we start with the latest on the bird flu outbreak. Korea's Agriculture Ministry has raised Korea's bird flu alert status to the highest level for the first time ever on the back of the rapid spread of the disease nationwide. The Ministry of Agriculture, Food and Rural Affairs said the government decided to raise the watch level from alert to serious as an increasing number of farms have reported outbreaks of the H5N6 strain. The ministry added that it will come up with detailed measures to curb the outbreak, including shutting down farms if necessary. Since the first case of bird flu was reported on November 16th, more than 10 million chickens and ducks have been culled. There have been 53 confirmed cases of the virus since then, with another 21 cases being tested. Meanwhile, there have been no cases of human infections detected here in Korea. More than 9 out of 10 Korean companies are less confident than the government and research institutions about the country's growth potential for next year. According to a survey conducted by Yonhap News Agency on more than 30 companies of Korea's largest conglomerates, around 65% predicted the economy will grow between 2 and 2.5% next year. 28% of the firms forecast growth of between 1.5% to less than 2%. Now, this is lower than the Bank of Korea's projection of 2.8% and the OECD's forecast of 2.6%. The companies mainly attributed their negative outlooks to the rise of protectionist policies and the domestic political turmoil sparked by the power abuse scandal. Finance Minister Yoo Il-ho and Bank of Korea Governor Lee Ju-yeol are set to hold an official meeting tonight to talk over pressing economy-related issues, especially in light of the most recent U.S. Fed rate hike. The Ministry of Strategy and Finance says this comes as both fiscal and monetary authorities are trying to come up with ways to work together to prepare for additional tightening from the U.S. next year. The two will also go over measures to respond to other external uncertainties, including potential policy changes from the incoming U.S. administration, as well as UK's withdrawal from the European Union. The last time two leaders met for an official discussion was back in January. And moving on to markets, to give us a wrap-up of this week's stock market action, we have our Business Daily's markets contributor, Choi Jin-seok, joining us on the phone today. Hello, Jin-seok.
Good afternoon.
All right, so as we close the week, how are things looking on the last day of trading?
Both the Kospi and the Kosdaq finished strong on the last session of the week. The Kospi rose by 0.2% to close at 2042, while the Kosdaq followed with a 0.2% uptick to close at 622. The two indexes showed a similar picture. The Kospi once fell into negative territory in early hours as institutional investors unloaded massive amounts of shares. But investors saw less uncertainty throughout global financial markets as major central bank meetings ended with expected results. Both retail investors and foreigners bought shares during the session, lifting the Kospi index. On the Kosdaq market, the index once fell to as low as 617, but soon recovered to hold above the 620 level.
Then how was the overall weekly performance? I mean, small to mid-cap stocks seem to outperform large-cap stocks, right?
Exactly. On a weekly basis, the Kospi rose almost by 1%, while the Kosdaq enjoyed a huge rally of about 5%. After the National Assembly passed the impeachment motion last week, foreign investors had bought massive amounts of shares, in particular sectors that had fallen significantly in the recent days, and small to mid-cap stocks that had underperformed all year long benefited the most. By sector, bio and pharmaceuticals, display, and media performed strong, while steel, transportation, and banking shares performed weak.
Now, after the U.S. Fed Reserve's second interest rate hike, strong dollar trends are expected to continue at least for a while. So what kind of movements do you think we'll see?
Right. Strong dollar trends provide a mixed picture for global investors. First, expectations for economic recovery in the U.S. are reflected in the rising dollar. Obviously, investors will welcome this as the world's largest economy accelerates its pace of recovery. Second, a strengthening dollar reflects faster than expected future rate hikes by the Fed. Along with the first raise in a year, the Fed signaled 3 rate increases in 2017. So pressure from a strong dollar trend can give foreign investors reason to pull out their money from emerging markets. In this regard, investors will need to watch any following market events related to future directions of the U.S. dollar. This has been Choi Jin-seok for Business Daily.
Countries around the world are slapping Korea with an increasing number of non-tariff measures, while the number of cases worldwide have actually dropped. And there are concerns that rising trade protectionism spurred by the incoming Trump administration in the U.S. could make things worse. Our Kim Min-ji reports.
Is Korea already being hit by a resurgence of trade protectionism? Non-tariff measures slapped on Korean goods have more than doubled in the last few years. Between 2012 and 2016, non-tariff measures stood at 134, up from 65 between 2008 and 2012. Non-tariff measures refer to trade obstacles that are not in the form of export or import taxes, including anti-dumping duties, technical barriers, and import quotas. Unlike Korea, non-tariff measures around the world dropped almost 4%, coming to a total of 4,652. This shows that while countries around the world are inking free trade deals, at the same time they are also applying non-tariff measures to protect their domestic goods, especially against players with an upper hand in their market.
Korea is a rare country that has a trade surplus with any country in the world except oil-producing countries. So that's why all the other countries are pushing Korea for increasing non-tariff measures.
What's worrisome is there are signs of more challenges to come. The U.S. recently finalized hefty anti-dumping and countervailing duties on Korean steel imports, while China is also looking to strengthen its protectionist measures, especially through anti-dumping and safeguard duties on Korea's key export items. Some warn that it could get harder for Korean exporters in light of increased trade protectionism from the U.S. under a Trump presidency.
Because Korea's economy is much smaller compared to the U.S., and we depend quite a bit on the country, it's hard to take counteractions. But we need to monitor protectionist trends and respond, either by expanding trade networks on a broader scale or looking at import regulations imposed on individual companies.
Experts add that Korea needs to make better use of its free trade deals and actively seek more trade pacts to minimize the fallout from growing protectionist sentiment. Kim Min-ji, Business Daily.
A comprehensive bank account management service has been launched recently, allowing users to check and close sleeping accounts with one click of the mouse. Authorities hope that this will help flush out cash that's going unused. Our Lee Ju-young has more.
6 accounts. That's the average number of bank accounts a person holds in Korea. In total, that mounts up to roughly 230 million accounts. But according to the Financial Services Commission, about 45% have never been used for over a year, leaving roughly $12 billion virtually untouched.
I have about 3 accounts, but I mainly use one. I don't even know the balance or what banks I'm registered with for the other 2.
In order to get rid of idle accounts and enhance efficiency, the Financial Services Commission and the Financial Supervisory Service have launched a consolidated bank account management service. It allows users to check all of their different bank accounts in one go and close those that have remained inactive for the past year. Users can also transfer up to $250 from dormant accounts to those in use.
Customers can improve their asset management efficiency, and banks can reduce the cost of account management.
Since its launch on Friday last week, roughly 420,000 accounts have been canceled by 500,000 users nationwide, potentially bringing back $2.2 million into circulation. Lee Ju-young, Business Daily.
Time for a look through some of the important global business news that made headlines this week. And for that, our Eunice Kim joins us in the studio today. Hello, Eunice.
Hello.
All right, so this week wasn't over with the FOMC decision. The Bank of England also had its monetary policy meeting, right?
You're absolutely right. And the Bank of England, of course, still facing uncertain waters ahead, as we still know very little about what the UK and its departure from the European Union will look like or mean. Now, the BOE on Thursday local time held its interest rate steady at 0.25% with no changes to its $88 billion monthly bond purchasing program from this summer. Minutes show their concerns into the new year outside of Brexit were challenges in European banks, increasing borrowing costs in emerging markets, as well as capital flight from China, describing the global outlook as having become more fragile amid the rise in policy uncertainty. The UK economy itself, though, looks to be doing okay in the second half of this year. In fact, the policy committee said it's watching out for annual inflation to overshoot their 2% target next year, driven in part by aggressive spending on a weaker pound. And it's not just foreigners looking for a deal on Burberry. Global accountancy firm PwC, in a report this week, said British households spend more than any of their European peers, spending on average £50,000. That's about $63,000 a year.
The great British consumer has come out fighting. That's good for the economy. It's kept the economy going post the referendum. The bad thing is that we have a very low savings ratio, much lower than in other European countries. And I think that makes us vulnerable to any slowdown in the economy. And also, with inflation rising above the Bank of England's target, I think that the prospect of that spending continuing at that rate is diminished.
And of course, the Brexit impact will obviously be very closely watched, especially as this year is coming to an end. But I think the bigger trigger this year was supposed to be the U.S. Fed rate hike. So what does the impact look like so far?
Right. So analysts here in Korea are watching for a potential hit to bonds, but perhaps the most immediate impact that we saw were in currencies, as the U.S. dollar shot up to a 14-year high against a basket of major currencies where it still hovers. And this is what it looked like for the Korean won this week. We saw it peak to nearly 1,187 won to the greenback, a weakening of nearly 2% compared to what it was just hours before that FOMC rate hike. The Japanese yen also took a big hit, weakening by more than 3% at its lowest point. The Indonesian rupiah fell by more than 1.5%. The Singaporean dollar, considered one of the most exposed Asian currencies with the Korean won, dropped by nearly 2%. And the euro was flirting closer to parity against the dollar after trading at $1.06, plunging to a 13-year low.
So I guess we'll have to see how long the strong dollar trend will last. But judging from what Janet Yellen and the FOMC had to say this week, they're quite bullish on growth for next year, right? And also, of course, that a lot of hinges, though, on the policies put forth by the incoming Trump administration. So what can we see from his cabinet picks so far?
That's a good point, and that's perhaps it could help explain just the bullishness we've seen on U.S. stock markets in recent weeks. President-elect Donald Trump has been tapping quite a few familiar names in the business circuit. As you can see here, Rex Tillerson, his pick for Secretary of State, is CEO of ExxonMobil, the world's largest publicly traded oil company. Tillerson is also known to share a long-standing personal relationship with Vladimir Putin. Also, a lot of talk around Andrew Putster becoming the Secretary of Labor as Chief Executive of CKE Restaurants, which owns in part Carl's Jr. and Hardee's. He is been critical of things like raising the minimum wage, but he could become America's next labor secretary. Now, Forbes magazine estimates the net worth of Trump's would-be cabinet is a whopping $14 billion. But of course, all of these nominations will have to pass a Senate approval where individuals like Tillerson could undergo extreme vetting.
Right, definitely keeping our eyes closed on that before he's inaugurated in January. Thank you so much for coming in today.
You do.
And that wraps it up for today and this week. But we'll be back next week with more at the same time, same place for your Business Daily. Thanks for watching and goodbye.